What we've done is erode all the opportunity out of the whole thing. And maybe that's the good thing. Maybe we've actually finally reached the bottom of this. So some stuff will survive, but I think what we've done is hyperscaled this cycle, destroyed all of the excess gains that were possible, and that's hopefully the end of a lot of this. And we can then have a cleaner market.
Raoul Pal explains that the crypto market has gone through a major reset, eliminating unsustainable gains and speculative excess. He believes this process, while painful, is ultimately healthy as it clears out weak hands and sets the stage for a more stable and mature market. With many overleveraged projects collapsing, institutional investors remain cautious, awaiting clearer regulations before committing large-scale investments. However, this reset could build a stronger foundation for long-term financial security in an uncertain global economy. Pal also discusses how Bitcoin's cycle is unfolding within a broader economic shift. Liquidity is only beginning to return, and while volatility remains, Bitcoin has shown resilience compared to other assets. Unlike previous cycles, the current one may extend longer, potentially into 2026, as economic and liquidity conditions evolve. With ETFs, institutional adoption, and new financial structures emerging, Bitcoin's downside risk could be smaller than in past bear markets, making it a more stable store of value. The speculative frenzy around meme coins and NFTs has also reached its limits, leading to rapid cycles of hype and collapse. While some assets like Dogecoin may endure, the era of easy profits and quick flips is fading. This brutal process of creative destruction, similar to what happened with NFTs, helps eliminate excess and refine the market. Ultimately, Pal sees these shifts as necessary steps toward a more sustainable and transparent financial system built on blockchain technology.
Believe this cycle even exist anymore, the idea of how cycles have run in the past?
Yes, I think it's a big deal for this cycle, because when I speak to institutions, both from the investment side or those that want to build on blockchain rails, this clarity is desperately needed. Desperately needed. Now, they kind of are moving forwards because they know it will be pretty liberal now going forwards in how we can use this technology. But it's still not easy enough for corporations to do this with ease. So look, it's a very big deal. It will bring in much larger check sizes from much larger players over time. So yes, for this cycle. In terms of cycles, unless the US government manages to pay off all its debt in one go, we're in this cycle. It's been the same repeating 4-year cycle. It's driven by the debt refinance cycle. It's a global cycle. There is no way around that, because of the aging population and the debts that we have. So the only thing is, will this cycle morph it somewhat? Of course they all do. Like the last cycle peaked really early. Why? Because the business cycle peaked early. In March 2021, the business cycle and liquidity peaked. When we go to 2017, liquidity in the business cycle peaked right at the back end of the year, and then it had a blow off top. 2013 was similar. So the last time around was actually the abnormality, and there's always going to be an abnormality. So what is the one most likely to happen this time? Well, if the crypto markets and liquidity peak when the business cycle peaks, and we'll use the ISM survey, the Institute of Supply Managers survey, as our proxy for that, we've only just bottomed and we're breaking 50 to the upside. And that's going to take several months or a year or so to get there. So probabilistically speaking, it might push it into 2026. So that's something we'd have to get our heads around, is actually it goes a bit longer than we imagined. So that's what I'm thinking about this cycle. Then we've got to think, okay, is the downside going to be the same? Because we've got new players, we've got ETFs, we've got different stuff. People can put Bitcoin in their 401k. And I would argue we probably have less downside. Bitcoin's downside has been less each cycle. So maybe it's down 50 or down 45 this cycle, versus NASDAQ would be down 20, let's say. That would make sense. Now, a whole bunch of everything else will go down 99% or 95%. But what we'll see is the majors going down less than previous cycles. I think that's my most likely outcome. And so it can catch people off guard, because if people are waiting for the bottom of a cycle in 2026 and it's more of a sloppy sideways range and everyone's expecting it to go lower, you can end up having this whole mess where you're very bullish but you don't own anything. So I think let's see how it plays out. But I think it's going to be, it'll always be different. I'm just trying to figure out where it's going to be different. It's definitely not going to be a short cycle because we've only just started the liquidity cycle. We've only just started the business cycle. So it won't be short. Will it be towards the back end of the year, which would be normal? Or could it be back into 2026? And then what does 26 look like? Maybe less frantic than the last cycle, which we saw a lot of collapses and a lot of things going horribly wrong. But you've got to remember how money works in the economy. Right now, there's all of these pension plans and all of these private equity funds and all these VC funds. They've had no exits. Nothing has gone public. Things like Stripe, still not public.
Yep.
In the crypto land, Circle, still not public. Kraken, still not public. So that we need to see the capital markets open. We need to see money get recycled, and then money can move through the system. So that's one of the issues. So a lot of the crypto-based investments is from the crypto market that releases as the capital goes higher. But at the traditional investors, there's still not enough money. So we're having to bring in new capital, and that might be the Middle East or a couple of others. But we're not getting the traditional investors fully involved. They just don't have money right now. And that's a function of what I talk about when I talk about the business cycle. The business cycle, if you think about it, when the business cycle is expanding, it means people have more earnings, whether it's at household levels or corporation levels. Those profits and earnings get recycled into investments. And that's what drives a lot of this. So we're still at this point where we don't have everything in place to have a massive institutional involvement, but we are definitely seeing signs of it. Once we get the regulatory clarity as well, just a basic guideline, it'll accelerate further. So I only see acceleration ahead, but it just takes time.
Raoul Pal emphasizes that the recent collapse in the crypto market has been a necessary correction, wiping out excess speculation and unsustainable gains. While many investors and institutions are still waiting for regulatory clarity before making larger moves, Bitcoin's resilience suggests a potential for stronger long-term growth as the market stabilizes. This reset, although painful, could ultimately provide a clearer and healthier foundation for the future of crypto. Pal also points to the extended nature of this cycle, possibly lasting until 2026, with less drastic price declines for Bitcoin compared to previous downturns. The speculative hype around meme coins and NFTs is dissipating, and what remains will be built on stronger, more reliable structures. The ongoing process of market cleaning through creative destruction will leave only the most valuable projects standing, paving the way for sustainable growth in the crypto space.
So what's happening with Doge and the U.S. government? What's happening with Elon? Obviously, we've seen the performance so far. You look at the looming shutdown coming up here in March. Is this something that we should be worried about in the crypto market, or is this kind of a non-starter?
It's a non-starter because, as we all know, the US has trillions upon trillions of debt to roll over, as do the Chinese, as do the Japanese, as do the Europeans, as do the British, as do the Canadians, and they're going to have to bring rates lower and increase liquidity to do it.
Right.
And everybody knows liquidity is actually the largest driver of asset prices. So if we have a government shutdown, we will use what's known as the Treasury General Account, which is the US government checking account, and we will drain that. Now there's $800 billion in that, so that's plenty of liquidity to start with. And then if they run out of that, there's plenty of other forms of liquidity. So I think that over time, yes, Elon is trying to stall payments. You know, they've laid people off, they put people on freezes, all of this stuff. So you'll have less deficit spending. Okay, great. But we still have all the existing debt to roll. Sure. So what we have to do is roll that. So the liquidity has to come. So it's a good thing to do what they're trying to do. We can argue all day whether they're doing it in the right way and to the right things and whatever. Yeah. But generally speaking, to be braver in how you lower government spending when you've got this much debt is an intelligent thing to do. I don't believe there's a debt crisis that comes. I just believe it just gets monetized. And so as opposed to a whole debt blow up where everything goes down 90%, we go from a debasement of money of 8% a year to a debasement of 12 or 14% a year. And that's pretty ugly. Look, we might not want to know as people because it's ugly.
Yeah.
But if we're participants in crypto markets, we've built this parallel financial system. I've been in this space since 2013, pushing this narrative forward. This is a parallel system that solves a lot of the issues that we've got.
Yeah.
So we get a immutable source of truth for all forms of information, whether it's the government finances or who owns the security, whatever it may be. And so it is obvious that a source of immutable truth is better than a concealed lie driven by a bureaucratic machine of the government. So I think over time, it can only be positive. It really can. Things that need to be truthy can get truthier very quickly. Economic data is one, right? There's always the argument, and has been for as long as I've been in markets, economic data is manipulated. Well, once you put it on chain, it can't be. It's provably so. So we can do it with that. We can do it with spending. We can do it with budgets. All of this can go on blockchain. Now, let's see how brave they actually get versus what they say. But I think economic data might be. But there again, Trump might say, fuck that. I actually just want to massage the data myself. So people say they want truth, but it's not always clear that they do. I think the difficult thing is most of these people are not us. So these are younger people with no chance of buying a property, who are seeing nothing but sort of a bleak financial future for themselves. So it's become this kind of financial nihilism, or to put it in a more positive term, it's a more speculative economy because there are opportunities there and they need the opportunities to leverage. So they will always keep looking for the 50x, even though however often we tell them, listen, there's no such thing as consistent 50x returns. Really, if you're owning Bitcoin, Ethereum, Solana, Sui, whatever, you'll do fine. But that's not good enough for them. To have another 5 or 10x from there is not good enough for them. So they are looking for something. The sense is that they will stop looking under this particular pile. Yes, they might find memes, whether it's Pepe or whether it's Doge or whatever, that survives and does well. But I'm not entirely convinced that meme coins will be the great attraction any longer. We had this market of like high-end art that did really well, then the PFPs, and then there was millions of PFPs, and the whole lot went to zero. And by the second cycle, we can see that punks retain value and Bored Apes retain value and Pudgy Penguins, but a whole bunch of them don't. So I think it's the right process. The creative destruction cycle in crypto is very fast and very brutal. And that's maybe a feature. It's a feature, not a bug, I think, probably. It's just been this endless cycle of people who are trying to capitalize in on this. Okay, fine. The issue being is that everybody's getting destroyed by this. So if we go back to meme coins 9 months ago, you could make some money. They would go from a low market cap, and then maybe they go to $1 billion. And people had a real chance. And then more and more issuance came, and more kind of insiders were part of it. And it just became this endless slew of new issuance, of which the people would get out after day 5, and then day 3, and then day 2, and then hour 5, and then hour 2, and then hour 1, and then 30 seconds after launch. So they've got faster and faster and faster and faster, and more and more of them, that what we've done is erode all the opportunity out of the whole thing. And maybe that's the good thing. Maybe we've actually finally reached the bottom of this. And some memes will survive, because memes survive all of humanity. So Doge has lasted since 2013. So some stuff will survive, but I think what we've done is hyperscaled this cycle, destroyed all of the excess gains that were possible, and that's hopefully the end of a lot of this. And we can then have a cleaner market.
Raoul Pal discusses the necessary market reset in the crypto space, where excess speculation and unsustainable gains have been wiped out, creating a healthier foundation for the future. He notes that the recent volatility in the crypto market, along with the collapse of overleveraged projects, is part of the natural cycle of creative destruction. While many institutional players are waiting for clearer regulations before investing heavily, Bitcoin continues to show resilience, indicating that the market's long-term potential remains intact. Pal suggests that this reset may lead to a more stable and cleaner market as the speculative frenzy dies down, allowing only the most valuable projects to thrive. Pal predicts that the current cycle could stretch into 2026, with Bitcoin potentially experiencing less downside in comparison to previous cycles. The meme coin era, which has seen massive hype and overproduction, is coming to an end, and Pal believes that only a few projects like Dogecoin may survive. As the market matures, it will likely be built on stronger foundations, benefiting those who understand and recognize the shift early on. This process of creative destruction, though harsh, will ultimately leave the crypto market in a healthier state for the future. Do you believe the current crypto market reset will lead to more sustainable growth in the future? What projects do you think will emerge as winners once the speculative frenzy fades? Feel free to share your thoughts in the comments below.